Those of us who follow Elon Musk and Tesla, have been having some extremely exciting times. What with the 1010, what with the rocket, the booster being caught by Megazilla, and then following with the earnings call and all of the other stuff that's been going on the last few weeks, just crazy. Well, it's just going to get crazier this next week because we have got all kinds of data coming out next week. We've got five of the Magnificent Seven having earnings reports next week. We've got the election is only at this point 9 days away. Crazy, crazy times. Well, we'll start off. I want to make a correction to my earnings call or earnings information that I gave you this morning. Let me share the screen real quick here. Let's see. I always have trouble with this part of it. Okay, here we are sharing the screen with any luck at all. Here we are. Okay, and let me open this up so that it's easier to see. All right, so what we have after all is a mistake with the robo-taxis. So I had it down as 3.25 billion. It should have been 0.325 or 325 million. So if we go through this again really quickly, by the way, that was the only error apparently I made, at least the only one you guys found. And actually nobody even argued with the numbers, with exception of somebody on X. One person on X said they thought my vehicle numbers was too high, but they agreed with everything else. But you know, I gave some great detail on this vehicle number, so we'll see. Anyway, vehicles, I'm saying is $19.4 billion in profit. That is based on, if I remember right, it's around $8,000 per car or something like that, but I can't remember that for sure. Then we got energy coming in at 6.825 billion. We've got Robotaxi at 325 billion, 0.325 billion or 325 million. Services another at 1.6 billion for a total of 28.15 billion in overall profit. Take away the overhead at 12 billion, other income at 1.2 billion gets added back in. Then you've got a total of 17.35 billion before tax. Income tax at 22% gives you 3.8 billion. That's net then to 13.55. Total outstanding shares, 3.198 billion. Divide that and you get an EPS of $4.23. Now, if you don't think that the robotaxi thing will happen this year, you can take that out and it drops it to $4.13. So you can see now this is a much different story than what I gave you this morning. So I'm very sorry about that. I always get into trouble with those power of tens, and I should run them. As some people say, well, Brandy, you know, you put all this on a spreadsheet, it would be easier. Well, my brain at this level, when I'm doing this kind of top-down, works a lot better without a spreadsheet. But yeah, you'd probably be right. I should then put it on a spreadsheet just to make sure my numbers are right. Okay, so that's what the numbers are. Once again, you can put your own multiple on that. If you put a 60, you'd be talking about, we'd be right about where we need to be right now for the share price. But if you put 100 on it, now you're talking about all-time high. So by the end of the year, my projection was this morning, by the end of this year, if people buy my numbers, if they're close to my numbers for next year, we should be seeing the stock near all-time highs by the end of this year. All right, so because that would be the forward PE on at 100 times. All right, so from Dan, let me get rid of the sharing. You guys don't want to watch my script while I talk, do you? I mean, that would be boring. So Dan Priestley, who's with the Tesla semi-truck division, he says, we work closely with our customers to ensure that we have the appropriate charging solution for their operations by leveraging the in-house built hardware common with Tesla charging and experience from deploying 60,000 DC posts, which can often deploy fast charging for semis at 500 kilowatts fully loaded to customers. Not uncommon for competing installations to be less than 2 times that. Tesla's vertical integration, economies of scale, and developing construction techniques enable this savings and help semi be even more compelling. I'm not sure I 100% understand what's being said in this one. I should maybe have done a little bit more analysis on it, but it sounds as if you could charge the semi at the regular charging stations? Is that what they're saying? And maybe if you needed to top off, help me out, somebody. Let me know, because I don't. Maybe we need to go back and take a harder, longer look at that one. This is from Tesla Roddy. In a video updated on Saturday, Tesla semi advocate and Giga Nevada drone observer 𝐒𝐮𝐧𝐝𝐚𝐲 shared footage of the perimeter steel columns and beams as they now wrap around the factory's northeast corner. The video taken mid-morning on Friday also shows the perimeter having made it about halfway down the eastern side of the factory as they continue to head south. Viewers, if you want to go take a look at the video, you can go to his X account and see a few loading bays built into the northern perimeter, some of which will be used for the delivery of raw materials. The video also shows a lone Tesla semi sitting beside the factory expansion sign, and 𝐒𝐮𝐧𝐝𝐚𝐲, ZANEGLER, says he has reason to believe that it was being used for a media shoot of some kind. All right, so this is Randy Kirk, by the way. Hit the like, subscribe, and notify. Tomorrow, regular programming. We have got Brian White on midday after, of course, the regular after the bell stuff in the morning. And then Larry Goldberg will come in. Maybe he'll have some concerns about my numbers that I just gave you. Maybe he'll think I'm too high or too low. Who knows? But we'll talk to him about that, along with many other things at the end of tomorrow. Tuesday, we have nothing on Monday. No information coming out on Monday in terms of reports from government or other agencies. But on Tuesday, it begins. And on Tuesday, we will get the S&P Case-Shiller Home Price Index for 20 cities. Last month, they showed a 5.9% year-over-year increase. This month, they're saying that they're thinking it might be flat. No, that can't be. They got a couple of dashes there. Does that mean they don't know? They didn't ask? I don't know. Anyway, I always see those dashes, and I'm not sure if they mean that they just didn't ask the question or they didn't get a response back. Anyway, I'm going to say that it's going to be very close to the same, 5.9%. That would be my guess. I have nothing indicating to me that housing prices are mellowing at all. Consumer confidence report will be out that morning as well. Last month at 98.7, they're thinking it'll go to 99.2. That is actually still a soft consumer confidence number, but it's increasing, getting better, which, if that turns out to be true, and of course, I guess that would be okay. We have job openings coming out on Tuesday as well. Last month it was 8 million. Shockingly went up. That was a big surprise. It impacted the market. This month they're saying it'll drop back down to 7.9. I think where it was 2 months ago. But we'll see whether that turns out to be true. Then on Wednesday, the real numbers really start on Wednesday. We start with, just a second here, I kind of lost things here. We get the ADP employment numbers. Last month, they increased by 143,000. The pundits who've been asked think that this month it will only be 113,000. That would be a very big slowdown in terms of jobs added. GDP numbers come out on Wednesday. Last month was showing 3.0. Very strong. The pundits who were asked, the polling says 3.2%. That would be extremely strong, especially for the third quarter, which last month had a very large increase. I want to say around 5%. Then we've got the trade balance in goods last month at 94.2. No number being offered here. Advanced retail inventories last month was up 0.5. Nothing being offered. Advanced wholesale inventories, same thing. Some of the, like the beige book last week was suggesting, and other information we were looking at suggested that inventories are building. But inventories, I think it would be normal to advance in the just before Christmas. Not sure whether this is important or not. Pending home sales on Wednesday morning as well. Last month up 0.6%. They're thinking that pending home sales will drop. Now, that would be seasonally normal for pending home sales to drop. We'll see if that's true. Down 0.2% is what they're predicting. On Thursday, we get into the PCE, and it starts with personal income. Last month was up 0.2%. The polling indicated this month up 0.4%. That is the number we are seeing everywhere. Everywhere is suggesting that wages are going up 0.4%. So they're suggesting personal income will be up 0.4%. That would be very strong and would be something that might give the Fed more pause about what they're going to do next Thursday. Personal spending also last month was up 0.2, and they're thinking personal spending will be up 0.4, which would be very strong for the Fed. Then you come in with the other PCE, the regular stuff, the headline number. Last month was up 0.1%. This month they're saying it'll be up 0.2%. The year over year last month was 2.2. They're saying it'll be 2.1 for the PCE. Now remember, this PCE is the one that the Fed pays the most attention to. So 2.1% year over year would be fine if that is the number that they come up with, actually come out with. Then you get to the core. Last month the core was only up 0.1. This is the one that the Fed really looks at, the one that they're most interested in. This month they're thinking it might be up 0.3 because a lot of that headline number is going to be in oil and the energy number, and it is of course been declining. By the way, wait till you see today. Wait till you see what the pre-market's looking at. Anyway, core PCE year over year, 2.7 last month. They're thinking it's only going to drop to 2.6. That would still be pretty strong and not a good number for the Fed, although dropping down would be good. We'll see if they can hit that number. Initial jobless claims also come in on Thursday as usual. Last month, 227, which was a little less, I think, than expected. This month, 235 is what they're expecting. The U.S. Employment Cost Index. Now, this is an interesting one. 0.9% up last month, suggesting last quarter. So this is a quarter three number. So 0.9% quarter over quarter. So that would be, and they're suggesting it'll be 1% this quarter. So either one of those be roughly that same 4% year over year, multiplying times 4 quarters. That would be a little lighter than what we've been hearing if it only comes in at 1%. Then you got the Chicago PMI, the Purchasing Managers Index. Last month was at 46.6. They think that's going to drop a bit to 46.1. I think if I remember right, the Chicago PMI came in at 46.6, was pretty hot last month. So maybe they're figuring it's just going to pull off a little bit from a high. Okay, if that's not enough, if that wasn't enough excitement already in this week upcoming, then of course on Friday is November 1. That means it's Employment Friday. So U.S. employment report last month was 254. They're suggesting that's going to drop down to 110. But remember, that's not the important number. If you follow my channel, you know the important number is how much was the change from the previous, at 254. I would not be surprised to see that be down 100,000. It wouldn't shock me if it went down 100,000. And then the 110,000, that might also be a high number that'll have to be revised later. Overall, I think 110,000 will be a good number, but I would expect that number from last month to come down. The unemployment rate, they're expecting to stay the same at 4.1%. They're saying hourly wages will, which were up 0.4% last month, only going to be up 0.3% this month. That would be helpful to the Fed. But hourly wages year over year staying at 4% from last month's also 4%. So everybody seems to be agreeing, coalescing around that 4% number. S&P final U.S. manufacturing PMI also comes in on Friday last month, 47.8. No prediction. Construction spending, which was down a tad last month after being way up the previous month, they're saying flat this month. And then ISM manufacturing number coming in a little bit hot at last month, 47.2, moving up to 47.6. That would be a positive for the economy because we really do need manufacturing to start to improve. And then we'll have various auto sales numbers coming out during the week as well. All right. Now, That would be a pretty exciting week, right? Okay, well, let's just go with this. How about Google parent Alphabet is reporting their results on Tuesday. Microsoft and Facebook, or Meta, will report theirs on Wednesday, and then Apple and Amazon report on Thursday. So 5 of the 7 Mag 7s reporting this week. All of those are expected to have very solid earnings reports, most of them in the double digits. Then we also have Visa and MasterCard reporting. That'll give us some indication of what's happening, with credit, whether people are getting too extended and whatnot. We'll hear those kind of numbers. We have Pfizer and Eli Lilly. Eli Lilly's been, considered that maybe we have to change it to the Magnificent Eight because of Lilly's numbers recently. So we'll see if they're continuing to just bang it out of the park. And then we'll also hear from Ford, and we'll see how their BEV division is doing. Okay, all right. So is that enough? Well, okay, that's all we got for now. So what is happening with the pre-market? We will begin, as always, with bonds on Sunday night. We have got the 10-year up 3.6%. If you thought it couldn't go any higher, it's going higher. 4.268%, just crazy. The 2-year up 3.8% at 4.136. The 3-month up 1.3% at 4.646. See, then that's coming down. See, that spread is now only down to 40 basis points. And the 2-month only going up 2 basis points at 4.718 makes that spread under 50, basis points. So that inversion is coming down. Now, remember, when it gets reinverted, that's supposed to be a sign that we're in the recession. Nothing is indicating. We're seeing again that 2 worlds. Up 100,000 income and over, no recession. Under 100,000 income, recession. These industries over here, manufacturing, etc. I'm sorry, manufacturing, tech, medicine, anything associated with the government, all those things are going up. The manufacturing and some of the others going down. So 2 economies and 2 different spectrums. So recession or no recession? Depends on where you are, I guess, who you're working for and where you are in terms of income. Okay, so then we go past that. Wait till you see this. This will blow your mind. Oil down $3 in the pre-market. That's Texas Intermediate to 68.76. That is a recent low. So we're well in. I think we were down in the 60s. Maybe not. Can't remember right now. Anyway, Brent also down 72.98. Now, why is that happening? Well, because the Middle East thing is now settled way down with the Iran thing going back and forth. They didn't attack the oil fields in Iran. It's unlikely that Iran is going to hit back right now because their ability to defend themselves was completely destroyed by Israel. They have no air defense at this point, apparently, according to Israel. So it would be silly for them to attack Israel right now and then have Israel come back and be able to just do whatever they want, is basically what would happen. So very, very interesting situation right now. We have, natural gas also down big time, 3.13% to $2.48, but that's still a good number for natural gas. Gold is down 550, so still sitting way up, 2,748. Silver barely down 0.01%, 33.77, and copper up 0.16 at $4.37. We have got the dollar up against the yen and the euro, 0.39 against the yen, but only 0.04% against the euro. We have got the Bitcoin up 894 today at 67,931. So kind of in the middle of where they've been recently. Now, as far as equities are concerned, and this would be, give us some evidence of where the market is thinking about this week. So we've got the Dow up 126 or 0.3. We've got the S&P up 24 or 0.4, and we got the NASDAQ up 95 or 0.46. Generally speaking, this would then indicate that the markets are thinking that the tech stocks are going to do very, very well next week. They're going to hit their numbers or beat their numbers, give good guidance. So we might see all week, we might see a very strong market all week as we see these companies come in one after another with good numbers. But you got to look at the other ones too. It's not just about the Magnificent Seven. You got to be looking at these other companies. How will Tesla do with regard to all that? Well, typically, if there's enthusiasm and confidence and positivism, and right now people are positive about Tesla, overall over the week, you could see Tesla go up a bit, continuing to make its move towards 300. And then toward the end of the year, of course, I think probably up to all-time high in the 410 range. Okay, so let me know what you think in the comments below. Where have I got it wrong and right, and in between? What would you have said differently? And then hit like, subscribe, and notify, and I will see you in the morning. It has been great. Oh, one last thing. Cards for part 1 and part 2 of how I broke out all that information to get to that profit expectation for 2025. I think you're going to like it. So check them out. Part 1, part 2, there are the cards. All right, that's it. See you in the morning. It's been great talking to you.